afternoon, traders. My name is Alan. A lot of you know me as Trader Alan from some of the forums. My blog is WALLSTREET2EASYSTREET.blogspot.com, and I would like to take a few minutes to go over a couple of my charts and discuss my entries and exits and my thoughts for each individual trade. For those of you that don't know, my forex trading is purely scalping. I look to jump in, grab a few pips, and get out with minimal loss. So let's go and take a look at a couple charts and see what they look like. Okay, this first chart here, this is the euro dollar, and what I had here was a range going on. You can see here we had one top of the range, two top of the range. We had a previous bottom of the range. Here's another previous bottom of the range. So at that point I draw out my box here to make it easy for me to see the range, and typically I will draw this box out into the future, and that allows me to watch the trade tick by tick as it ticks along inside my support and resistance area. Then as I see it approach, I get ready to place my order. In this case I was a little bit late. Should have entered on in this area. However, if I remember right, I was talking at the time, and when I look back at the chart, I'd already got the breakout of the resistance. So I went ahead and entered here at this point and watched the trade as it went along. It came up here to where it reversed, come down, came up here again to this area, reversed, dropped down here, almost stopped me out. My stop would be at the bottom of this range here, or 10 pips. 10 pips being the maximum loss. And then when we got back up to this area again, move the chart over a little. At this point, I see we hit this area again. I went ahead and closed out the trade at this line. And that's because due to this overhead resistance here, here, and here, I decided to go ahead and exit the trade, take the pips that I got. Okay, here's another chart of the euro, and what I'm looking at was I had another trading range, so I'm looking for a break of the range, which we got at this point. The signal candle would be this candle right here that I'm going back and forth on. This one is the one that closed outside of the box, outside of the range. Then I'm looking to enter when price clears this candle. So this candle here I still hadn't entered, and the moment that it did break, which was this area, that's when I actually entered the trade. So this is my entry candle here. This is the third one up. So we have 1, 2, 3. This is where I entered. And shortly after entering, the market went sideways again. Then finally, at roughly about 8:30 U.S. time, the market took off and moved again, and I closed it out for a profit up here. Pretty cut and dry trade that one is. Okay, we had several things going on this chart here. I had this small block break here where I entered on a break of this block. I know it's small and compacted. I had to squeeze it up to get all the information in here that I wanted to. But on this one I entered a break of this block and rode the price up a little bit and sold off the position in this area. I had a large position going on, so when I got the first little hint of resistance, I went ahead and closed part of the position, then closed the rest out over here. Here I had a double doji entry. You can see we're still in an uptrend. Market came up here to another high, pulled back. I typically look for my pullbacks to be 50% of the last move. So from this low to this high, pulls back to 50% of that move. I have the doji candles. I entered the break of the doji, and I rode this one up for a nice profit on it. Closed it out at this level, and then this is a repeat of the last scenario, except I missed it. I did not get in on this trade here, but this is the same thing. I had this little block going on, and we broke out of the block back to the upside, which is the direction of our trend. So this one would have been a good trade here to take, and exit up here at the 50 level. And if you notice, here we are at the 50 level. So I never enter trades near the 50 level. It tends to mark a area where the markets tend to turn, the 0, 0 and the 5, 0 level. So I generally prefer to trade away from the 50 level. So as we can see here, the market comes up, hits the 50 level, hits the 50 level again, and here it breaks the 50 level. So now we're waiting to see, are we going to be able to hold the 50 or not? And of course it came back down below the 50. And here we are again, still hitting the 50. It came back down, and of course the 50 level did not hold, and the market ended up going back down. So that's why you have to be very careful trading around that 5-0 level. There tends to be a lot of traders that have orders placed in that area that tend to turn the market pretty easy. Alright, I hope you got some understanding of those last charts, and I'll try to post some more charts on here to give you all more of an idea of how I scalp in Forex. If you have any questions, you can always drop me a note at WALLSTREET2EASYSTREET.blogspot.com, and good trading to all.